This conference will now be recorded.
Are you working as an accountant, either general ledger accountant, AP accountant, AR accountant, fixed assets accountant, or a general accountant, and you want to transform yourself from the role of traditional accountant to finance business partner? Don't wait to climb up to the corporate ladder to get some senior level position in accounting and finance function, or don't wait for getting jobs with the title of finance business partner or commercial finance, or in fact, don't wait for your organization to start some cross-functional projects for you. Believe me, finance transformation or transformation from the role of traditional accountant to finance business partnering, it takes a long period of time. I myself gone through this transformation journey and it took a quite long period of time. And recently also I have worked on finance transformation project in my current organization. So all the tips and techniques which I'm going to share with you now based purely on my own personal experience. So the good news is you can start your transformation journey even now, and in fact you should, because the expectations of business from accountant is being changed tremendously. And as you know, the emerging technologies are changing the business landscape at a breathtaking pace, including accounting and finance function. So if you not start your transformation journey now, or if you not transform yourself into the role of finance business partner or a strategic business partner, you will be left behind very soon. So you should start your transformation journey now, and how I'm going to tell you. So first thing first is the finance business partnering is more of a mindset than the skill set. To initiate your transformation journey, first of all, the cornerstone or the foundation of that transformation journey is your right mindset. If you have number crunching or bean counting mindset, and if you are not ready to step out of your finance and accounting department, believe me, you cannot transform yourself into the role of FVP or the strategic advisors. Apart from this, also most of the accounting and finance professionals, they have very conventional mindset that we are not getting enough salary, we are not being compensated. So why should we go to some extra mile and spend extra hours at work? Because believe me, the finance transformation journey or transformation into this role, it needs lots of efforts, and you have to spend extra hours and you have to go some extra mile at your work. Otherwise, it's very difficult to transform yourself just by doing some traditional accounting and financial reporting task at your work. So you have to first build up your mindset that you are ready to spend some extra time, some extra hours. You are ready to go some extra mile at your work, because your employer or your boss, he's not responsible for your career transformation or for your career development, right? Your employer is paying you salary to meet their business and strategic objectives. They are not the one responsible for your career. It's you who has to take the ownership, initiative, and responsibility for your own careers. And believe me, as I mentioned earlier, transformation is a journey. It took me a long period of time, and in reality, it takes a very long period of time to transform. So these are some of the tips which I'm going to share with you. These are very highly practical tips. Like tomorrow, you can go to your work and you can start applying these points at your work. So as I mentioned, this presentation, I made it purely for accountant, either a general ledger or AP or AR accountant. And the points which I'm going to share with you are within that context from that perspective. So for example, if you're an accountant, of course, you must be involved in processing some invoices for your expenditures in your organization, like OPEX and CAPEX, some operating expenses or some capital expenditure. The first step is you should know who is the project owner or project manager or the person authorizing that transaction or even the staff in that department. Then you have to start interacting with them, meet with them. Just it will take you 15 to 20 minutes of your time to Go to them, meet with them, and try to identify some business activities which are associated with those expenses. It will help you to understand the drivers behind such expenses. For example, if company is buying any plant or machinery or any equipment, meet with the person or the project owner or the department who is buying that plant or machinery and ask them what are the business activities. Either it relates to the customer service to improve or enhance the customer service, either this is relating to some operating project or to enhance or to improve the capacity of the business or your production facility. It could be so many reasons, so many business activities are there. Don't wait for the implementation of activity-based costing for the organization. You have to take the initiative on your own. Just list down some major OPEX and CAPEX for your organization and identify the business activities and the drivers behind such expenses. And you cannot figure it out, obviously, by sitting in your accounts department. You have to meet, you have to interact with the non-finance business function. You have to connect with them. Try to understand then the business and strategic objectives associated with such business activities. For each business activity, there are, of course, some business or strategic objective. For example, if we are buying a new equipment or new plant, for example, maybe our objective is to improve the production efficiency or the operational efficiency by 10%. That could be your strategic or business objective for that. Or maybe your company is trying to expand the operations into another region and they want to enhance their production capacity. That could be the strategic objective relating to those business activities. So, as I told you, very simple. Whenever you are trying to record or any OPEX or CAPEX transaction invoices in your general ledger, identify the business activities and the related strategic objectives by meeting with the relevant non-finance business function. Then ask them about their upcoming plans and their financial ramifications. So if they are going to expand their operation and they are going to enter into another market, just meet with them and ask them. And of course, being an accountant, you have the full authority to ask regarding their new initiative or projects which has financial ramification. Of course, every project initiative has some financial ramification or financial impact. You can ask from them. There's no harm in it. Then ask them how you can support in controlling these expenses or managing the cash flows in a more effective and efficient way. Of course, being an accountant, you have expertise in this field. So just ask them and support them in this area. Then it's all about the collaboration. Focus on maintaining supportive attitude towards non-finance business function. Don't just confine your interaction with them relating to payments or some mechanical calculation invoices, because most of the interaction of finance with non-finance business function is limited to the payment, like operation and other non-finance function. They are approaching accounting department to ask for the payment of their suppliers or relating to some calculation in the invoices. Don't just limit your collaboration or your interaction with them to this level. As I mentioned before, try to identify the business drivers and the business activities associated with them and build very strong working relationship with non-finance business function, including sales, marketing, operations, supply chain, HR, and IT functions. These are the main business functions. Just arrange some meeting. Just try to meet with them informally over the coffee or even over the lunch. Try to spend some time with them. They have many problems and challenges other than payments. All these non-finance business functions, they have lots of challenges. Ask them and try to support them in solving their problems and navigating through the challenges that they are facing. For example, your sales and marketing function, you can say like your product portfolio manager, maybe he's facing the challenge of declining sales of a certain product line in particular region or market. You can support him by, for example, providing some comparative sales information of the competitors in that region or in that market. Or maybe you can provide them some industry related data or economic related data, which are might be the reasons of such decline. And believe me, you don't need to have a very powerful ERP systems or EPM system for this. Simply, you can maintain such record in the Excel. You can make some analysis report in your Excel, and you can just present and discuss it with your product portfolio manager. It's this all about the collaboration. In this way, you can start to collaborate and build relationship with them. Same like this in the operations function, maybe your plant operator, he's facing the problem of cost overrun. He's incurring cost due to the disruptions or the breakdown of machineries. Figure it out with him, sit with him. Maybe that machinery is not being maintained on time. You have all the maintenance record from your maintenance ledger in your accounting records from the books of account. Figure it out using that maintenance record. Maybe that maintenance of that plant or machinery is not being done on time. Discuss with the plant manager how we can make maintenance a schedule to do the maintenance of all the machinery on time in order to avoid any disruptions or breakdown of any machineries. Same like this in the supply chain, your supply chain manager may have some problems with the raw material pricing. Of course, you are expert in the costing side. Help him in calculating and comparing the prices of raw materials. You are also dealing with some suppliers relating to payment. So you can also have very good relationship with the suppliers. So use your relationship with suppliers to minimize or to control the cost of raw materials with them. And this way you can collaborate and support your non-finance business function. Then maintaining what I called it as a strategic records. Again, you can maintain these records in a simple Word or Excel file to document all the data and information you gather during your interaction with non-finance business functions and discuss with your colleagues and superiors in your accounting and finance department. For example, if you have a very large accounting or finance function, maybe you have different sections for reporting, budgeting, treasury, or accounting, discuss with them in a weekly or monthly meeting. Discuss with them, discuss with your superiors. Of course, most probably they will be impressed with your extra efforts which you are doing. In case maybe your accounting or finance manager, maybe they don't have that mindset, don't worry about it. They are not responsible for your transformation or for your career development. Just continue your efforts. Of course, it will help you in improving your own profile, in improving your business awareness, improving your business acumen, and building your strategic mindset. Because as I told you, this is only the start of your transformation journey. These tips will help you only to initiate your transformation journey. It's a long journey you have to go through, and you will face lots of resistance, lots of challenges. So be very proactive. Don't be reactive. Don't become victim of circumstances or any resistance or any conditioning around you. Become very proactive. Be Keep yourself in control. Don't worry about any resistance. Just continue your efforts. Then get up to date on what's happening in your industry, markets, and overall economy, and keep on updating your strategic records, as I mentioned above. So it will help you to support your non-finance business functions. Then, if you're also involved in financial reporting, being an accounting manager or finance manager, or even as an accountant, don't just report bad financial numbers of sales, marketing, or other non-finance business function to management, because there's a mindset of accounting and finance professionals that if they found any financial information which relates to non-finance business function, and if they are underperforming or their performance is not good, they treat it as their victory and they immediately report those numbers to their management. Believe me, it will only harm your relationship with them, and you can never become a business partner with your non-finance business function do if you take this type of approach. I'm not telling it all to hide any underperformance or bad performance from your management. Never do it. But before reporting such bad performance or underperformance of the department, go to them, meet with their project owners or head of departments or project managers, as I mentioned in the previous slides. Collaborate with them. Ask them what is the reason behind such underperformance. Maybe they have upcoming plans to improve their performance. Maybe they are taking new projects, initiatives they already have and under the pipeline. So just discuss with them, and then when you're reporting such numbers to management, complement such numbers with a storytelling and upcoming plans based on your interaction with non-finance business function. Don't just report it and then take all the credit. It will not give you any credit, rather it will harm your relationship with your non-finance business functions. Then in your reporting, include some financial as well non-financial KPIs. For example, if you are reporting assets turnover ratio, include some non-financial or operational KPIs or indicator as well. For example, number of breakdowns and the reasons behind this based on your information that you have gathered, that you have recorded in your strategic records, as I mentioned. But because the financial KPIs are only the leading indicator, what has already happened. Behind lagging indicators, there are some leading indicators as well, which are causing those lagging indicators. So the financial KPIs are only the lagging indicator. Don't just confine your financial reporting to lagging indicators.